this chart, we can see that price is on an uptrend, and we also have swing lows here that we can connect. So we can just draw a trend line right here. Now, since the market is in an uptrend, we expect the price to bounce off upwards. So the only trend line that we need to draw is this one below. Next, I use an indicator called the stochastic. To apply it, go to the indicators section on your charting platform, type in stochastic. Click this one to apply it on your chart. Once it's applied, we need to change the settings to the custom settings I normally use. So, go to its settings, and just copy these values. This will help the indicator give better signals. Now that all the tools are set, we can start looking for entries. So, what I look for is price approaching the trend line, but I also want to make sure that the blue stochastic line crosses into the oversold level, which is this bottom level here. So that would look something like this. But keep in mind, as I mentioned earlier, we treat trend lines as zones instead of fixed lines. This means that price doesn't have to touch the trend line perfectly, as long as it's within the zone of the trend line. While the stochastic crossed oversold, the setup is still valid. For our last entry confirmation, wait for the stochastic line to cross back inside the oversold levels again. So, to recap, first we want to see price approaching the trend line area. Next, we want to see the stochastic crosses into oversold, then crosses back inside again. Once these signals are met, I open a buy position. For the risk management, we set our stop loss slightly below the swing low in this area. And for take profit, we target 2 times the size of our stop loss. And as you can see, price bounced, hitting our take profit. So the key to this strategy is simply using stochastic as extra confirmation for our trade, so that we don't blindly enter trades when price touches the trend line.